Hey guys, today is the last trading day of the year, and I was actually able to take a look at the charts. Actually was a quite clean day today, so we have Wednesday, so obviously we expect expansion on the daily chart, and as you can see right here, we definitely expanded lower and scrapped daily sales and liquidity, traded into the liquidity void right here, which I was looking basically to target before. Definitely an interesting level, and also the higher time frame gap right here, which was also like respected right here on the daily chart, so with the rig right here, and because we displaced through it, we now expect kind of support coming from the level right here, so definitely also an important higher time frame PD area. So let's drop to a 15-minute chart. What you can see right here is basically the fact that we just traded lower, and also like with an Asian session, and then from basically formed a short-term low within basically our London session. From there on just traded higher, and also like New York Open Kilsum was expanding higher, and to me that's only manipulation. Why? Because we are targeting lower prices on the daily chart. Therefore we have basically manipulation higher, and then a beautiful market maker sell model to the downside, also like reaching external sell side liquidity. But before we drop to a lower to a 1 minute chart, I want to show you regular trading hours. So on regular trading hours right here, we had a gap which was smaller than 40 handles, so therefore we can ignore it. But what's quite interesting is the fact that we still have like the regular trading hours sell side liquidity right here intact, which was scrapped, or which scrapped previous sell side liquidity as well. But we could not trade basically into the liquidity void right here. So basically the lower portion of the gap is still untraded to, so we have no price action in here of the Monday's new opening range gap. So that's definitely what we want to see get filled in, and we actually did that basically also like already with the opening, and now we are trading lower, and also like targeting lower prices. So we are also on a market maker sell model on regular trading hours. As you can see right here, we had equal buy sell liquidity, we scrapped that, and then we are trading obviously lower because it's basically the same chart as electronic trading hours, but it's still a bit different. So we have kind of different liquidity pools, therefore it's sometimes really interesting what we just have on the regular trading hours chart. And also right here with the opening, we already basically traded higher, scrapped buy sell liquidity right here, and then we traded lower and expanded lower. So with that we can drop to ES. Wait, so right here ES was actually quite similar. The only difference on ES is the fact that we have let's remove this, that we have basically reached the London session liquidity way earlier, so already at 10:15. So we had a SMT with NQ for basically a short-term period of time. And also if we drop to a daily chart, we can see that we swept actually our buy sell liquidity, so we reached basically all-time highs in here. We have immediate term high, short-term high, and short-term high to the right, and then basically displaced through the bullish favor gap right here and traded lower. Also disrespected the bullish favor gap right here. We are still expanding lower, and what I'm looking at on ES is the basically the daily quadrants levels right here. So yeah, that's what I'm looking at, basically why I'm still expecting that we will reach lower eventually. And already on ES, so as I already mentioned, on ES we reached external sales liquidity way earlier. So let's go back to NQ. What I basically marked out right here is that we have our perfect 9 a.m. macro within or our perfect smart money reversal within our 9 a.m. macro. So we have SMT right here, we have session liquidity sweep, we have also a change in the state of delivery with basically just basically closing below the breaker right here and then using it as resistance. And then with the opening we traded lower, basically was used as expansion to the downside. We swapped New York open kill zone sell liquidity, and from there on we basically ranged. So what I was looking at is that we sweep buy sell liquidity, and from there I was still looking for shorts. The quadrants right here is the liquidity void I was mentioning before, and I was still looking for external sell liquidity because we have definitely a market maker sell model aligned with the higher time frame. Therefore, I was definitely looking for London lows and even the higher time frame gap, and we reached it with the London close macro. So let's now basically take a look on my executions. So I took my first short right here after we swapped basically the buy sell liquidity and also traded into the balance price range right here, which was first used as support right here, then also respected it right here, traded higher, traded below it, traded to it one more time and expanded lower. So definitely a level I basically want to take a look on. And then I got stopped right here, so we one more traded higher, but that's fine. Re-entered right here, also added right here because I was really had a strong conviction that we would still trade lower. Definitely it is not a quality trade I took today. That's definitely not the case. Why? Because we are basically entering below consequent encroachment of our price range. So if we expect that we reach the London lows, and that's our external liquidity draw, but if we take basically a look on our quadrants, you can see that we are way below consequent encroachment. We already reached even the upper lower quadrant, so that's what we want to see for a market maker sell model. In that case, I was really convinced that we would reach extra sell liquidity. Therefore I still took a trade, but that's not a quality trade, so I have to repeat that. Definitely a day which you can avoid because you can assume that you will have high resistance. Why? Because you already reached the lower quadrant. Therefore to reach the external liquidity is way more difficult for NQ. So yeah, and that's what we will basically will present itself as high resistance. And then as I already mentioned, I was looking for London lows. We had SMT right here at the low of the candle right here. So right here SMT swept London lows, NQ did not. I should have taken a partial right here actually. Then went break even. I went break even, did not take a partial and got stopped right here. But we entered right here after we basically traded below the balance price range, first used as support, then used as resistance, added right here one more, and then was expecting actually a expansion to London lows within our London close macro, and that definitely took its time. So NQ really had high resistance today. Definitely not the easiest conditions, but you just have to stay convinced basically with your trade. So also we have right here a breaker, you could say, which was also first used right here as support, and then we traded below it, and now it's used as resistance higher. So definitely a clean expansion to the downside within our London close macro. I took my first partial right here. My second partial right here I mitigated basically because the 5-minute chart wasn't looking so clean, and then accidentally actually closed my position right here because I just traded my take profit within basically into the negative. I wasn't aware of the fact that I would get stopped right here, but it was also kind of getting a bit boring, I have to admit. Still I'm up on the day, so that's for today basically. Right here the first loss right here I was actually break even, but still with spread and so on, I get stopped in negative -7.8. But yeah, that's the 3 partials I took. So overall I'm up I think $33, so from 3,070.60 to 3,070.63. Yeah, and that's basically it. So definitely a trading day which can get or which you can avoid to trade, because we are already overextended. We are not trading in quality conditions. We already missed basically all stages of the market maker model, which will have a low resistance liquidity run. But today I really was also like yeah, just trading a bit of experience, I have to admit. Also like with ES already looking very bearish, actually also like wanting to reach the daily quadrants of the daily wick. So therefore I was content with taking a small risk. Still was not trading my prop firm account. I'm still trading on just paper trading, because we are still like in not the best trading conditions. I will wait for the first week of the year. After that I will focus on trading on my prop firm account. But yeah, that's actually it. I hope you liked it. Definitely learned something new with taking partials at the S&T with ES. Definitely a really important yeah, really important lesson. And also something I could have basically managed differently is the fact that I can, if we only expect a short-term expansion within the London close macro. So basically right here, we already reached our daily objective, I would say, and we are now in high resistance, and we basically look for one more move to the downside within our macro. So we don't expect that we will continue trading lower, basically outside the macro, but within the London close macro, I expect one more move to the downside. But I think in that case, I can definitely also try to have my take profit right here, and do not basically make a use of partialing. So using partials is definitely the way to go if you expect a expansion, but in that case I only expect actually one more move to the downside, and then yeah, we are now trading higher once again. So therefore I miss out on a bit, or actually on a lot. So having a take profit right here at the higher time frame gap is definitely something I could try the next time if I'm trading only like a yeah, short-term expansion, and not a really expansion basically also like outside the macro. Yeah, I hope you get what I want to say. So that's basically it, and see you soon.